to another edition of BCR Webcasting. I'm very happy to be joined today by Thomas Enemark. Thomas is the co-head of Trade and Working Capital Solutions at Danske Bank and will be taking part in our forthcoming Receivables Finance International conference, which will be in Berlin on the 5th and 6th of May. Welcome, Thomas.
Thank you much. Pleased to be here.
Thomas, your session in Berlin is about democratizing receivables finance for SMEs and mid-caps. So just to ask you a little bit about that, let's look at what banks are doing in this space, and what are the barriers preventing SMEs and mid-caps from accessing receivables finance, and where do you see the sort of quickest methods of improving access, or is this a myth that it's difficult for banks to provide receivables finance to SMEs?
Thank you for the question. I think it's a little bit a myth that's the case. I do recognize that at least in the Nordics, where Danske Bank is operating, at least there might be a focus on the larger corporates within the receivables finance space. But on one hand, there's a market where more specialized lenders are actually providing, especially the SME segment, with receivables financing. And we, as a large bank that services all segments, we are also having office that are tailor-made for the SME segment. But I do recognize that there is, you could say, receivables financing is more complex, it's more time-consuming compared to, you could say, more plain vanilla financial solutions, and therefore, you could say, there's obviously a cost-benefit analysis servicing the very large corporates compared to the SME segment. But I think that's a little bit a myth, a little bit lack of awareness that is actually the solution is actually out there. So I think to a large extent, at least in the Nordics, SMEs can really access these solutions.
Yeah. I was going to say it might depend on the market to some extent, because certainly in the UK, the banks have pulled out largely from SME.
Yeah, I noticed that, and I think from our side, so we are actually investing in the segment, and I can see our competitors is also investing in the segment, and that's very much around actually creating some more digital solutions, some more straight-through process flows that makes it easier and reduces the cost to serve for the segment, and also have the right advisory for the segment. But so I rather see as I see in the Nordics, at least there's a focus on also serving smaller corporates with receivables finance solutions.
But it's sometimes said that the solutions are designed more around the business rather than for the business and how they actually operate. I mean, is that a fair comment? And what is it that does the industry get this wrong about SME financing needs?
I do recognize I do recognize that there's something in it. What I often have experienced also with my background being head of strategy for our large corporate institutions business unit here in Danske, then we often sort of build solutions to the larger corporate and then sort of use that for the SME and mid-corp segment as well. And you could say when you do that, you sort of build for one segment and use it for another segment. But I think that's also a little bit the past, where at least we as a bank have really started to create tailor-made solution to the SME segment, whether that being within the receivables financing or just any other banking solution. But I think there's a legacy where there's a natural difference between the very large corporate and the SME segment, and they have different needs, that different setups, different treasury function, different finance function, and therefore you need different solutions and you need different operating models, you need different advisory models. And I think some bank and maybe also us have been a little bit, it's only within the last years that has really been a focus to actually differentiate that more.
Yeah, but I guess it's it's perhaps easier to tailor-make solutions to some extent for the larger corporates, because you know the relative costs are different, aren't they?
Definitely is, and I think that's why there needs to be. It needs to be much more digitalized. It needs to be much more standardized. The operating, the advisory model needs to have a low cost to serve, right? So to offer it to the SME segment.
What about regulation? I mean, there's often arguments about whether regulation is of benefit or whether it's a constraint in the receivables finance sector. In your view, where has regulation accelerated access to working capital, and where has it held it back?
I think in general, you could say regulation, even though we in EU there should be sort of a common regulation operating across countries as we do in Danske. We still see different gold plating or tailor-making of regulation, meaning that every time you have something for a specific country, it's not necessarily exact same solution for another country. That being both regulation, that being VAT rules, that being transfer pricing rules and the like. And with that in mind, it also just makes it much more difficult to operate efficiently across countries, which is important when you also service the SME segment, because the cost to serve need to be low. So from my point of view, you could say the regulation right now is not making it just a flawless. There's still a lot of regulation that makes it difficult to really make a easy to serve model that can also go across borders, so to say.
Do you think clients prefer a regulated industry? Does it give it a stamp of approval, do you think? I'm comparing it with, like, in the UK, for example, it's not regulated at all, so anybody can set up a receivables finance operation. I'm just wondering, does the stamp of regulatory approval, does that help in terms of your marketing these services?
Yeah, I think so. I think having I think that that's a broader discussion, right? But I think to some extent if you have a common way of doing it also across countries, I think it makes it easier. The more different rules you have across countries, the more professional also a SME needs to be in their setup. So the more streamlined things can be, whether that being regulated, so it's sort of the same. I think the better. So the less. So the more regulated, if that sort of is regulated, then to one approach across the European market, for example, then I definitely see that would be preferable.
And if you were starting afresh or starting from scratch to design a receivables finance service product, let's say without the hindrance of legacy systems, I mean, how would you do that? What would you do? How would you do that differently, if at all, from the way it's operated today? And also, what's stopping that from happening now?
I think we have actually tried to rethink a little bit how our receivables finance from a technical point of view is running, and we've been working for that for a year now, and soon to go live with a new setup. So we to some extent we have tried to rethink that and not building from scratch, but actually think differently on how we have set it up. I think I think there's actually quite a lot of fintechs out there that provide more or less a off-the-shelf solution that we as a bank could partner with. I think the challenge lies that we operate our receivable finance from the core, from within the bank. That means that everything we do, also from a technical point of view, that needs to be built into the core banking systems that we have. So we have real-time information, so we don't differentiate whether it's a receivable finance or whether it is an overdraft or whether it's different kind of finance. We haven't sort of the full exposure overview of our customers at any time. And you can say, given that we have that constraint that we need to build it into the bank, we can as such not, we still need to plug that via that APIs or in different connections. We still need to plug it into the bank. But taking that away, then I think some of the solution that is out there in terms of what can actually be done, I think I would probably, if I should build it from scratch, I'd probably just take one of those solutions and plug that into the bank, meaning that I would build or have a fully digitalized flow with a digitalized onboarding of the customers, a fully digitalized collateral system, a fully digitalized exposure system. So essentially could run a model where I, as a business could really focus on advising and selling the solution to my customers.
And sorry, what is stopping that from happening?
Cost and investment capacity and mental capacity, and I think we need we are on a growth journey, so we have actually done that a little bit, right? But resources are scarce, so you could say.
I guess this is where cooperation with fintechs is coming in.
Definitely is.
Thomas, thank you very much for your time today, and we will very much look forward to hearing more from you and your fellow panelists in Berlin. And just to remind everybody, that's on the 5th and 6th of May. It's at the Hilton in Berlin, and you can find more information about that on our website at bcrpub.com. Thomas, look forward to seeing you in Berlin. Thank you very much.
Looking forward to seeing you. Thank you. Pleased to be here.